following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. Let's take a look at one of our 4 agreements. Always do your best, but don't overdo. When you overdo, you deplete your body and you go against yourself, and it'll take longer to accomplish your goals. Market-wise, let's take a look at it out here. We have the Dow Industrials up 210, NASDAQ up 101, S&P's up 23. Let's go right over to the NASDAQ. NASDAQ and NDX 100, folks, you get new all-time highs. NASDAQ up here, we're trading at 78.18. Your last high up here was the 78.06. Your closing high was, your closing high was 77.81. So bottom line, you get an all-time high inside the composite, as well as I suspect we're going to get a closing high up there. The NDX 100, this is a heavy scene. NDX 100, inside the Qs, you don't have the volume, but bottom line is that we get price spread here. You're breaking over the highs that were established last week on the 20th of June. That high out there was 73.09. You're at 73.59. It's a monster number. Inside the NDX 100, strength versus the weakness. You got Broadcom is taking over CA. CA is up 18%. Big number. Broadcom is down 13.5%, but bottom line is that you can see 18 versus 13. Bottom line, they got it going. You get Baidu up 4%. You get Autodesk up 4%. Amazon is kicking in there at a big time. Amazon is up $40, $1,795, breaking out once again. And we're going to get with Amazon. You're not going to, yeah, you might get the volume. We'll see how that shakes out coming into the close. Apple also is on the move out here. That's putting juice inside the NDX 100. It's up $3, but, you know, the weighting structure is a big number. The high on Apple is 194.20. Right now, you're trading at 191.01. Netflix, we go take a look at Netflix. What do you have with Netflix? Netflix trading down $6, but it's hanging right at its highs, $412.73. Gold contract. What do we have with gold? Gold contract tested the lows of yesterday, rejected them, had lighter volume. Bottom line, now we need a sign of strength. You know, if we take a look at this contract, what you're going to see is that it didn't get to, it got under the low of yesterday, which we needed, number one. It didn't get to the low that was established on July 3rd, which is great. That low there was 1238. Bottom line, we'll see whether we can get a sign of strength. If we go take a look at the GDX, bottom line is that that camp is still out in the GDX. And the reason being is this. Well, okay, so I'll do the bearish part is this. The bearish part is that we came down hard with volume yesterday. You had 63 million shares traded. Now, the 63 million and the $21.94 was going into its high from February 9th. That February 9th number is a big number across all indices, all equities. So what we did yesterday is that we were coming into 101 million shares, and we did reject it. That would be like, okay, that's a good scene. The scene that I really don't like out here is that you get a bounce that's on 15 million. and we're coming into a Friday. If we go look at ABX, let's go take a look at the biggest weighting structure inside there. ABX set up the same way. You're up 2 cents. Newmont, we go take a look at Newmont. Newmont set up the same way. So big time coming into Friday. It's going to be a big number out here tomorrow. Silver, let's go take a look at the silver market. Now, the cool thing is here, silver is catching a bid. Silver out here today got under the lows that were established yesterday, got to a price point of $15.78. That also got you under the lows that were established on the 2nd and the 3rd of July. And we take a look at this, all of them, we did it with light volume. That's crucial. We did it with 61,000 contracts versus 82,000 versus 86,000 yesterday. So we'll see whether we can lay in a bottom out here inside those metals market. We take a look at the SLV, which is the trades that the ETF for silver. That's also a decent setup. The SLV, came down hard yesterday, but it did reject that $14.84. We got the $14.85. And when you actually miss swing points and you get juice behind it, it makes a difference. Notes and bonds. Notes and bonds still want higher price. Pretty amazing, actually. Let's go into the oil market. So oil blasted down yesterday, folks. We have oil right now is trading at $70.18. Oil market looks to me like what we have here. We got down to 69.23 today as a low. 71.24 is the high. Thus far, we've done, let's see, how many contracts? We have done 680,000 contracts. Yesterday, we did 862. Looks to me like oil will now start making its way into the lower swing, that lower swing being the price point of $65. King dollar. What do we have with King dollar? Okay, coming into Friday, coming into tonight, all of the above inside King dollar, I expect we're going to see some movement. And this is what it is. Thus far inside King dollar is that you have a big contraction of volume. You've done 14,000 contracts. You're going into 28. Hasn't been able to hold price. I'd love to see this baby close out about 35 ticks lower than we are. Right now, you're at 94,570. The high of yesterday was 94,535. If you could close under the 535, then you'd have a failure just of yesterday. Right now, we're still dealing with the downdraft from the 29th of June. That's how this baby has been shaken out. Some of the higher volumes, well, actually, let's go to the JP Morgan. So tomorrow morning, folks, what you're going to have, the financials are going to be kicking off. JP Morgan, it's kind of interesting, actually, no juice here. JP Morgan had a big day on Tuesday. On Monday, that's what took that market higher. It had already come back, tested the low of February 9th. For the low of February 9th, it was $103.98. After that, it had gone up as high as 119. It came down on Monday to 102. That being said, it doesn't look like there's much juice right where we are right now. Stay right there, folks. We'll be coming right back with our man, Mr. Jason Path from the Dutch book. Right now, you have the Dow Industrials up 200. NASDAQ is up 94. S&Ps are up 22. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrial's up 211, NASDAQ up 99, S&P's up 23. Let's go over to our man, Mr. Jason Path, as we do each and every Thursday at 20 past the first hour. And you get a great newsletter. Just go to thedutchbook.com, folks. He has a great newsletter. Jason is on every Monday at 40 past 10, Thursday at 20 past 3. Jason, what's going on, brother?
Not much, man. How are you, Tom?
Good, man. Good. So, you know, we've been talking oil. You nailed that 75, man. It's not like you thought it was going to go to hell in a handbag, but the bottom line is you didn't think it was going to go higher. And
no, that's right. I mean, what a day yesterday. Huge number, right? I mean, just a titanic number on the draw. Last time we had a number in the double digits on a draw was September 16th, right?
Okay.
September 16th was like a lifetime ago. Barack Obama's still president. Oil's in the 40s. And we had a draw north of 10 million. And we had a low to high move of north of 4%.
Wow.
Clearly yesterday was a high to low north of 5%. So
yeah,
I think that's confirmation. The terrain under markets is shifting a little bit. Yeah, we like the 74 to 75 range as a top. Back in May, we published a year-end forecast. We thought we'd be in the 60s.
Okay.
As we crossed Labor Day, we thought we'd get into the 50s by the end of the year. Took some heat the last few weeks and month or so on that, but we just didn't see anything in the dynamics that really had shifted. So we haven't altered that yet, and certainly feel like moves yesterday. We still got a long way to go to get to the 50s by the end of 2018, but I think supply takes over this market the longer we go. Some of the OPEC speculation will downshift.
Sure.
Saudi is ramping up production. I think Russia is going to deliver more, and supply will just start to eat away at this market and grind price lower. And
folks, when we're talking about these numbers, the refinery utilization was 96.4 out of 100. Okay, so you can imagine how those plants are working. And I said to Tommy yesterday when they come out, I mean, I guess it totally makes sense. If you and I owned a refinery, right, at these prices, you want to get as much out as you can, right?
Crank it. Full speed ahead, right? Like, do not go on vacation this summer.
Totally.
That's right.
It's amazing is that, and folks, the oil market itself has stayed up here for quite a while, and it's like you always have to wonder. It's like, okay, what? We know that we definitely had a big number, but it was the number was just the opposite of what you thought would actually happen, right? Because the reality, folks, is that they drew down more than the market was thinking, and then guess what? Someone else is saying that, hey, you know what, man? This thing is going south. No, we're going to sell it. We're going to sell it, man.
Right.
Pretty well.
Right. Yeah. I mean, if you had told me yesterday, heading into yesterday, the number would have been a 12 million draw. Clearly, that should have gotten more of a bid. And in the 5, 10, 15-minute time frames, we saw some pretty intense bars up.
Yes.
But I mean, it just fell off a cliff. It'll be fun to watch, man. That's why we do what we do. We'll see how it ends up. But we clearly feel like we're in a downtrend. Yeah,
and that's, and it's pretty amazing how things can change so quickly. Now, the chart I have up from your newsletter, over at the Dutch book, folks, is the monthly Cushing, Oklahoma WTI spot price and the field production. And you had been basically saying then that you thought would see a few more pumping it out, and that might have been the tipping scale, huh?
That's right. I mean, folks are cranking as hard as they can, certainly domestically in the United States. Still a little bit of a different story between WTI and Brent. But speaking of WTI, I mean, at some point supply has to tip, and we feel like we're approaching that day of reckoning here pretty quickly if we're not already there. Certainly, a higher dollar doesn't help. Don't think it's driving the move, but if you're looking for any other narrative right now in oil, you're really in your bullish. You're hoping for major supply disruptions above and beyond where we are, and that's about all you got right now. Otherwise, again, supply is just the dominant theme right now, especially with slowing growth. Obviously, China's had some choppy economic numbers lately. I mean, to really support a move into the 80s from here, we need to see global growth take a leg up, of 1% or more in the second half of the year to really drive the additional levels of demand to supply, or to support an $80 level. Again, that's barring any massive supply disruptions, which is just not something we see right now. We've got a few out there, but those are pretty well baked in.
Right. And if you go back to, with the TAF situation, I mean, I suspect I was going back to the 1930s, kind of looking at what was going on there, because none of us were around. You know what I mean? Like the last time this happened. And bottom line is that what you had, folks, first couple of weeks weren't bad, but after that, man, United States, Europe, everything was going down. Not just, and the real question I think comes up many times when you're reading some of that is that, okay, was the depression already starting? Where was the chicken, where was the egg? But fundamentally, folks, what ended up happening is that everyone got hurt, so production went down. So it's like, are we near that thing? Natural gas, we had natural gas numbers today.
Yeah, a little bit of a bullish surprise there, too. Certainly not the magnitude of oil, but this is a market that wants to work lower, in our opinion, and it's a bit of a grind lower. But, again, just similar to oil in that there's just really not right now a narrative that we see that's firm that supports higher price. We thought maybe we had a chance at that 30, 45, 60 days ago, and we had a nice channel moving up and to the right there for some time. But again, it's a supply story. United States producers are just at record levels. Week over week, we hit a new record. And unless we just have a massive heat wave above and beyond just typical summer heat that will fuel additional consumption, this is just, I think we're headed to 270 here in the next 10 days.
Yeah, so it seems that the bottom line is that we're going to have plenty of energy again. That between that 75 oil, folks, if it actually broke topside at 75, we could have been spending an awful lot of money on oil, because the highs that came off of then were $104. It's like I was happy to see that downdraft, particularly because, of course, we don't use barrels of oil, folks, but gasoline came down 8 cents unleaded wholesale, so big number.
That's right. Yeah.
So what do you think, market-wise out here? We got a little volatility both ways.
Yeah, I mean, clearly folks are waiting for the bank releases tomorrow. It's going to be huge. Always anticipation around that as we hit earnings season, but it feels a little bit more this time around. There's so much swirling geopolitically. The dollar, we feel like, is still continuing to move up.
Okay.
We see 95 in the near future. We were saying that last week at 94.
Yes, you were.
We felt like it's been resilient, but ultimately it's bullish. And again, indices, it's so frothy if you look historically, but One of the interesting things right now, if you just take a step back and look historically, money's got to go somewhere. Right now, it feels fairly fragmented, but returning to value feels like the long-term narrative that'll continue to take hold. Ultimately, right now, that's the United States, that's the dollar, that's large publicly traded United States companies. Again, talking about over time, because the rest of the world is just, it's messy, man. It's really messy.
And of course, every day there's more money because all these countries are printing money. So it just depends what the transfer is, folks, okay? Because all this money is a transfer. So what is the transfer? And as, you know, Jason is saying, thinks the transfer is going to be into the U.S. markets. Yeah, I can see it now.
A lot rotating out of Asia right now.
Oh, yeah. You want to get out of there quick, man.
That's right.
Listen, man, it's always a pleasure. You have a great one, safe one. We look forward to speaking to you Monday morning.
Love it, Tom. Looking forward, man.
Thanks, man.
See ya.
Stay right there, folks. We'll come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at some of those bank stocks. So let's go to the XLF first. So you got XLF on Monday, took off topside. Well, first off, you had a large consolidation happening. The top of that consolidation, January 29th, you're at $30 and 32 cents. As soon as we come into February, we went from 30 straight down to $26 and $26.76 in 5 days. Now that's your high volume February 9th low. You did nice bounce. You go back topside again to $29.81, and then it took 5 months to get into the February 9th low, you test it with lighter volume. So that's your XLF in general. Monday, you did get a pop, and you get a pop with volume. That being said, the way this is laid out, you're going to need another sign of strength. So the XLF is like, okay, can we hang out $26, $27? Yes, it's really not telling us much today. So let's go right into J.P. Morgan, because J.P. Morgan it will kick this baby off tomorrow morning. I believe it's 6:45. Yeah, it is 6:45. So they come out with number 6:45. Now, the last time that J.P. Morgan and the banks in general, folks, came out with numbers, the numbers were extraordinary, meaning that they never made so much money. Market sold them off. This is where you talk about deviant markets. Bottom line, market sold it off. So what we have out here with JP is that Monday rather, you go topside, has the juice. It had come down, tested its February 9th low. So that gives you clear ceiling that it absolutely can basically go higher now. The way that J.P. Morgan basically is set up here, it looks to me like we're right at the downdraft from the March area. In March, the week of March 23rd, J.P. Morgan went down 10 points. We went from 116 to 106. So the way that baby is set up, it's going to need a lot more juice. If J.P. Morgan closes kind of where we are, 106.76, that's going to bring you a probability that, guess what, J.P. Morgan's not going to go topside. Because it's going into this bar, and it's going to need a lot more juice, and the price has to stay. If we come into this close out here, and yes, we only got 30 minutes left, but if it gets into this bar, then it's going to have a chance to go topside. When I say get into the bar, you're up 37 cents now. J.P. Morgan would have to be up about 45, 50 cents. Bank of America, we take a look at BAC. BAC, same type of setup. BAC, you're at $28.76. That hasn't got back inside the February 9th level yet. You're going to have BAC come out with their numbers next week on the 16th of July. Citigroup's, took a worse beating. Citigroup's down from $80. You're at 68. That being said, it looks like Citigroup can actually get a little jump going. Citigroup is going to be coming out with their numbers tomorrow morning at 8 o'clock. We are at $68.50 right now. Let's go to Berkshire Hathaway. So on the way down, folks, Berkshire Hathaway is the largest weighting structure inside the XLF at this time. Berkshire wants basically lower price. Berkshire is down from $217. You're at $189. Your high volume swing low is at $189.30, and it's having a tough time getting through that area. So it's going to be intriguing watching those numbers come out in the morning, because those numbers will move the S&P. If we go over to the S&P and we take a look at it, we take a look at the SPY first, what you're going to see is this. The SPY right now has done 41 million shares. You're up $2.21. You're at 279.07. Now, this is the number. You get two different numbers. You get the high that was established out here on Tuesday, which is 279.01. You get the high that was established, what's that, the 11th of June, which is $279.49. I don't see it making that level. Now, both cases, this is going higher with dramatically lighter volume. So how this closes tonight is going to be really crucial, and this is why. Tuesday, we go higher. You have 51 million shares. We came down yesterday with 77. If we are at 41 million right now, if this can't even do 51 million shares, they can put 10 million into the close in a second. But if this can't even do 51 million shares and you close under that 279.01, that'd be a major failure. That would be basically releasing quite a bit about information about where this market's going to go, where the S&P is going to go. And if that's what you get, meaning we close above it, bottom line, that is saying that we'll go higher. You close below it, and the volume's below it, that's saying that the probability gets much higher that the banks, whether they have good numbers or not, will sell off. The thing that's intriguing here from the last time that the banks came out with the numbers, last time every number was good and it had nothing to do with the buying and selling. Figure that one out, right? It's pretty wild, though. Bottom line, they had the numbers. Guess what? Market sold right into them. The NDX 100, whole different animal. Whole different animal. NDX right now has the price spread. You're at 179.17. The further you get away from 177.98, the higher you can go. IWM. IWM right now, also, the difference in the IWM, and this is still bullish, saying it wants to stay up at the highs, is this. You're pulling back. Yesterday, we had volume of 23 million. We got under that low yesterday. We went to 166.64. You have 15 million shares traded. Now what this is doing, this is rejecting lower price. It's going to have lighter volume. Bottom line, that baby is setting up to go after its highs once again. Pretty amazing, actually. Inside the Dow Industrials, let's go take a look at what's the strength versus the weakness inside the Dow. Strength out here, point-wise, is Boeing. Boeing's putting 36 positive points, Apple 20, Caterpillar 17, United Technology 16. Taken away from it, Procter & Gamble 2, Coca-Cola 1, Verizon 1, Walmart 1. That's it. That's all she wrote. We'll go over to Goldman. Let's go take a look at Goldman Sachs. So Goldman Sachs out here. Let's see what we got here. Goldman's coming out with their numbers on the 17th. Goldman, you know, bottom line is this chart's really in trouble. So Goldman's, you know, last 6 months off a high of 273. Your high volume swing low is up at 240. You know, Goldman basically came down. Well, Goldman did two different things. Goldman is the one that rang the bell inside the banking structure. They rang the bell out there March of this year. That traded at 275, couldn't handle it, comes barreling down. You know, Goldman is trading right back where it was trading in December of 2016. So this is a high-end distribution area, and it's huge. And each and every time that it's been coming down into this area of 209, you've had an expansion of volume. So Goldman looks to me like is still the canary in the coal mine, saying it wants lower price. Dow Industrials up 207, NASDAQ up 98, S&P's up 23. We're coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator signal that subscribers I use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com and requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over and take a look at good old Papa John's. So, if you want to see a lesson in arrogance, a lesson in a lot of different things that are happening simultaneously, Papa John's has it all, folks. And when you hear the full story, it's pretty amazing. So, the guy that started Papa John's started a huge business, man. Huge business, okay? He's identified with it, the whole ball of wax. He was the CEO until 6 months ago, when the whole NFL dealing with the national anthem came out. He got in the middle of it. Bottom line, at that particular point, that's when his remarks, they got him out of being the CEO. What ends up happening next? He is still the chairman of the board. Now, what you're hearing out here, what I don't know is that why they're not, you know, news outlets in general should just, this part of the losing part of the story, because listen to this part of the story. This is the most bizarre part of the story. So what's being reported is that he came out with their advertising agency again, turning around, being racial, left and right, okay? Bottom line, like, see ya, don't want to be ya, okay? But check this out. At that meeting, okay, it was on a conference call. But you know what that meeting was about, folks? So listen, this is how arrogant this guy is. That meeting was about the board of directors had said to him, listen, you're not going to be the CEO anymore, but what we also have to do, we're going to hire an advertising agency, because this isn't their big advertising agency that's pushing everything out. They hired another agency that's really a public relations agency simultaneously. And the board had him talking with this agency, so it was all basically, you know, training. They had him talking with this agency so that when he's in public, bottom line, he wouldn't be spurting out racial slurs on a continual basis. What does he do? He's in training. He just can't help himself. When I went through this thing, I thought I was seeing things. Think about that for a second, right? They send you to training. Inside the training, you don't care. Bottom line, now he's out of everything. If we take a look at this chart, what you're going to see out here, yesterday the stock goes south. Today, you're going north. Now, this baby, the way this chart is set up, you know, this company has made a lot of money. I mean, if we go back 2008, the stock's at $6. 2016, the stock's at $90. Huge, right? Now what you have, though, is that when this broke down 3 months ago. Well, it broke down longer than that, but it broke a B point of an ABC structure on the way down 3 months ago. So you get a 39. Your A point up here is the high, is 90 bucks. Your B point is 55, so we're talking 35 bucks. Your C point is out here at basically 70, so you're talking about a $35 number. And if we do bring it over, you're going to see, you know, this, what we broke out from in September of 2014 is about 37. You know, so out here today, yeah, you get a good pop in the equity. Bottom line, I wouldn't be buying it. You know, if it gets down to those lower levels and finish that ABC down off, yeah, then you get some action. What the consensus probably is inside this board of directors is that they're going to probably try to move this out to a private equity company. Someone's got to come in, because now what you're going to need a different identification than Papa John, because we all know Papa John. That's the bottom line. He's the guy that started it. He still owns, well, as of, well, actually, we'll be able to tell right now, because what would end up happening is that if he sold any of it, he'd have to file right away, because I believe he owns like 29–30% of the company. Let me just see. Yeah, he owns 29.1% of the company. So if he files to sell it all, you'd have to do it right away. But bottom line is, you can see Papa John, his name's John, man. So, but the arrogance, man, is unbelievable. When I read that was the training session, it was like, that's how far out some people are, folks. Okay, it's sad and it's sick, big time. 877-927-6648. We can take a look at some of the higher vol. Well, here, we got to take a look at the two stocks one stock that's taken over the other stock, because you can see the damage that's done. So you get Broadcom, which is down 13.8%, is taken over CA, which is up 18.5%. So if we go over to Broadcom, we take a look at this. Is like bizarre, actually. Broadcom is down 33 bucks. Whoops. There we go. Okay, Broadcom's down 33 bucks. This is like a monster move, and this broke a whole consolidation. So the bottom of the consolidation is 222. The top is 285. So let's just ballpark it, 60 bucks. You take 60 off 220, and you got 164. And right now you're at 204. That's going to be a big hit, man. Well, it's already a hit. You get monster volume. The market's saying that, hey, listen, man, you're in the chip business. You're not in the software business. You know, Avco, Broadcom, the CEO, you know, he's put these companies, this company in particular, together by buying just about every chip company you can get out there. In 2014, it only did 4.3 million. 2017, 20.8 billion rather. 4.3 billion to 20.8 billion. That being said, that is all about chips. He didn't get to do the Qualcomm deal, and that would have been a good number for him. So let's go see. The difference here is that he's getting in a different industry now. That's, you know, software versus just the chip business. Inside the CA, that's a $4 billion company. And if you look at CA, now if you want to just see the opposite side of that run top side, well, here it is. Bottom line is that closed yesterday at $37, opens at 44 today. You put this back on a chart, and it's just a rocket ship. CA was trading at $13.08. Now you're at 44. And let me just see. I'm just curious as to what they bring to the bottom line. So they bring $2.59 a year to the bottom line. That gets you a PE of like 16, which isn't bad. And if we go back over to Avco, let's see what they're running at. That's going to be a harder one. Yeah, it's a harder one to calculate. Actually, they're saying that Avco is a PE of 27. That's a big number. So the market is still saying with Avco is that bottom line is that they are still growing, but you can see, depending on how much you're paying to grow, because that's how this CEO runs the company. He just keeps buying as many companies as he can get his hands on. What the difference, and then he buys them, cuts down the expenses as much as he can so they can bring more to the bottom line. Some of the other higher volume stocks out here today, and we'll see whether they're going to have any volume behind this move today. You get Bank of America up 8 cents. The GE is up 2 cents, no action there. Twitter is up $1.30. That was down $3.30 yesterday. You got Microsoft up $2.10. So Microsoft, that's also putting juice into the NDX 100 in a big way. Yeah, Microsoft broke topside. So that's trading 104. Not going to have the juice, but bottom line is you broke topside. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up at 209, Nasdaq's up 102, S&Ps are up 24. We're going to have the good old NDX, folks. NDX and the composite are going to be closing at all-time highs. Now, the NDX, this is not only just closing at all-time highs, this is getting away from the highs that it's breaking out from. This is a true wide price spread breakout. The last high inside the NDX 100 was on the 21st of June. That number was 73.08. We're at 73.62. So big number there. The composite, if we go take a look at that composite over there, composite right now, not as much. Composite 78.03, we're at 78.18. So that's going to get a little tricky composite-wise. And, of course, what a lot of that has to do with is that, you know, your FANG stocks are higher, and they're higher in a huge way, as well. I suspect what we have is this. Amazon's kicking in big time. That's up 41 bucks. Microsoft, we just brought out, brought up. That also is breaking out. Microsoft's up $2. You think it's wild about Microsoft, folks? Picture this. Microsoft has 7.6 billion with a B shares. In order for Microsoft to move 1.5%, which it's up, it takes a massive amount of buy-in. That's the bottom line. And, you know, the last high up here, we did have 28 million. It's only 20 million right now. I suspect what we're going to see inside the queues is that we are going to see a bunch of volume come in at the close here. Because what we do have inside, well, if we swap gears just for a second and we go to the NYSE has 444 million. That's probably going to do 750. Yeah, they can throw 300 million in there. We go into the composite. The composite right now is trading at 1.7 billion. So the composite, that's going to show that we have volume as you're breaking higher. Big number. Stay right there, folks. Lots of numbers coming out after the close. And, of course, tomorrow morning, make sure you do join us because that's when those banks kick off. We are going to be coming right back for the next hour. Dow Industrials up 219, NASDAQ up 104, S&P's up 26. We'll be coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Cultivate wisdom. You don't need to accumulate knowledge to become wise. Anyone can become wise. When you become wise, you respect your body, you respect your mind, and you respect your soul. When you become wise, your life is controlled by your heart, not your head. Market-wise, let's take a look at it out here. We had the Dow Industrials close up 224. You had the NASDAQ up 107. S&P's up 22. NDX 100, NASDAQ Composite, all-time highs. Gold contract up $2.80, trading at $12.4720. Gold saved itself. It got under the lows of yesterday. Had lighter volume, rejected it. Really didn't go higher, but you know, couple points, couple dollars higher. 225,000 contracts versus 300. Bottom line, coming into tomorrow, we'll see where this baby shakes out, and it's going to be all about that good old dollar. Oil flat, $78.22. After that downdraft yesterday, oil looks like it's going to continue to build cause. We're going to get some relief inside that oil market. If we go over and we take a look at unleaded gasoline out here today, the unleaded gasoline market, we're at 207 for unleaded. Unleaded yesterday went down 8 cents, folks. And that's what we need, of course, because we don't use barrels of oil, but we use that gasoline left and right. Notes and bonds. We go take a look at the 10-year note, and this is just so intriguing, man. Every time this has been going on for quite some time right now. I mean, when you take a look at the 10-year, the 10 as well as the 30, May 17th was the last low. That May 17th inside the 30-year bond, I mean the 10-year note, that is when the interest rates of the 10-year was 3.11%. Bottom line is that we are at 3.781 right now. So, no, I'm sorry, 3.849. 3.849. 3.781 has been the low for the last 3 months. Now, the way this 10-year is set up is it looks to me like we want to go topside and tomorrow. And this is why. The 10-year, folks, likes to do over a million contracts every day. That's just how it likes to trade. We came down today. Well, first off, yesterday you pushed higher with 1.5 million contracts. We got to a price point of 120.13. The high volume swing point that it's going after, that the 30-year has already hit, is on May 30th. May 30th, $121.03. We got down to 120 today. You rejected it. You closed out at 120.05, top of the range. This baby looks like it wants to go topside, as it has been going topside since that low that was established. If we take a look at the 30-year, the 30-year has basically been hanging in its higher range for 2.5 weeks. So the high on the 30-year is 145.28. We went to 145.14 today. 30-year did the same deal. A rejected lower price. You had lighter volume was going into. And the 30-year had already tested and failed, taken out the 30th, and done that on last Friday. Last Friday, we went to 146.11. Now, you only had 211,000 contracts. You were going into 386. Couldn't handle it. Now, what ends up happening is that the next volume characteristic that we're going to be talking about is the 211,000 contracts. The reason being, folks, is that you never can go higher highs and lower lows with volume all the time. What ends up happening is the markets reset themselves. As they reset themselves, what you're going to see is this, is that the reset was now you're going to take out 211,000 contracts. That shouldn't be that hard. Yesterday we did 266. And if that's what we get inside that 30-year, what we're going to see out here, let's put this up. Oops, US 1. So I'm going to put this on a continuous contract now. When I put this on a continuous contract, as to take a look at like where we are on a longer-term gauge. So on a longer-term gauge, the bond market in general, meaning the least expensive rates that we had, were generated out here in July of 2016. So it's 2 years later. That's when the 30-year bond was 177. It's going to take a huge amount of juice. I can see this running to 148. It's going to be really tough to get back inside that 148 because this is a major break lower. We had consolidated from December of 2016 all the way over to 1 year, December 2017. Then it falls in a lot smaller range. That being said, because we've been consolidating in this range now for 5 months, it's pretty easy to make it up to the lows of the last downdraft. So, King Dollar. What do we have with King Dollar? Well, King Dollar is going to be moving all night. King Dollar out here today didn't have the juice in it. We did 14,000 contracts. Now, the way that King Dollar is traded right now, King Dollar very well could basically just give it up in spades. And this is why. We've been at the same level now since May 29th, right? So you got a month and a half. When we take this and we put this on a continuous contract, what you're going to see is that each and every time they were up at a 95 level, can't handle it, pulls back. That being said, the first time that we actually pulled back on volume, because we had been up there for 4.5 weeks, is on the 29th of June. That was the first time that we actually come off that high after a test with volume. We did 28,000 contracts. Yesterday, what ends up happening? We go topside, and we have an expansion of volume. It was a decent expansion of volume. That expansion of volume yesterday was 25,000. Guess what? There's no buyers now. We did 14 today. And the 14 is going into the downdraft. The downdraft that we're talking about there is the 28. So it looks to me like good old King Dollar over the weekend is going to cycle into a lower range. 877-927-6648. Dow Industrials up 224. NASDAQ up 107. S&P's up 24. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So, Pizza Hut. This is going to get interesting watching how this thing shakes out. They are going to basically expand. I didn't know that they deliver beer right now, but let's see how this is shaken out. So, Pizza Hut is wanting to go after a lot more younger people, and that's every company in the world wants to do that. That's for sure. Because of course, once you get someone that they're young, if you can bring them, of course, the whole life, you're gonna do plenty well. So the chain in May expanded beer delivery from 100 stores in California and Arizona. They plan to add an option at more locations this year. Let's see what they're saying here. This is pretty wild, man. Here's our opportunity to re-engage at the college level. Chief Brand Officer Marianne Radley said in an interview Thursday. At the legal drinking age, pizza and beer are the natural fit, and testing has gone well. By kickoff of the NFL, we'll have it considerably in more stores. This is pretty wild, man. The push to sell pepperoni and beer may give Pizza Hut a leg up in the digital on the digital leader Domino's, as well as Papa John's, which is facing negative publicity over its founders' recent racist comments. In the meantime, clearly Americans are demanding more delivery options for their food and drinks. You know what's pretty wild, man, is that I'm not sure whether you'd have the chief brand officer coming out saying that pizza and beer at college campuses is a good thing. You know, right now, what I mean by that specifically is this. If you remember, if you like kick back like maybe even 10 years ago, it's 10, 15 years ago, there was a lot more problems on college campuses. It seemed with binge drinking, okay? That's a problem, period. This is, you know, they're going right after it. And listen, you know, bottom line is that the amount of money that is in pizza right now is pretty incredible. There's no doubt about that, because when you take a look at, you want to see that chart, that domino chart. That domino chart is pretty insane. And it's $354. Is that right? 354? Yeah, it is. 350. Oh, that's in London. One second. Wrong one. Let me get this one up. So we got let's get the American one up. Okay, here we go. So Domino's this is pretty amazing. Selling dough. You talk about going higher. Man, this is crazy. So 2014, Domino's does $2 billion. 2018, $3.5 billion. That's amazing. So you got a pizza place that's growing at 11% per year. 11.9% per year in the U.S., 10.6% internationally. Domestic stores are growing by 13.3%. And they're bringing, this year they're bringing $8.32 to the bottom line. We're all hooked on pizza, man. And, you know, the difference is that pizza now is, needless to say, it's $1 million business. You bring Domino's back, you want to see something really bizarre, folks? Okay, this is a, well, it's a 100-bagger. A 100-bagger. So, what was the guy's name? Lynch. I forget his first name. Peter Lynch. Peter Lynch at Fidelity years ago. He would have loved this one. So picture this. 2008 was as low as $2.40. 2013, it was still only at $16. 2014, $70. Bottom line, was that the right lows? Let's see. Yeah, October of 08 was the buy. That is pretty amazing. $4.20 up to $279. That's what's trading right now. $293 was the high. Huge number. Huge number, no doubt. The thing that's going to be intriguing is the amount of, I wonder how that works, is that if you're delivering beer, you must have to get a liquor license. Well, I guess they probably going to use the liquor licenses at their stores to deliver. I'm not sure how that works, but bottom line is that That is some big action. I guess it's going to be one of these deals. One call, give me a pizza, give me a six-pack, give me, you know, unreal. We go take a look at the XLK. So XLK takes off again today. You're talking about, you know, this is the whole tech sector. This also broke topside. I think it did, yeah. 70, yeah, it took out its highs. $72.38 was the last high that was up here. Bottom line took that out. And inside this, let's see who the largest weighting is, because yeah, Apple's your largest weighting. Apple and Microsoft. Apple was up like $3 today. Microsoft did break out. I haven't looked at Facebook yet, so let's go take a look at Facebook. Facebook broke out too. Facebook up $4. Last high out here, Facebook was 205. You're at 206.92. Let's go over to Google. Take a look at Google. Oh my God, look at Google. Unreal. So, you know, Google was slow to get going. But once it got going, this wants the highs also. Google was up at $29 today. You're at 1183.48. And it's much, 11, yeah, you're $3 away from it. 1186, which was on January 29th, was the high. And Google came in today and did have volume behind the move. That's, you know, that's saying, hey, guess what? You can break topside. Netflix, we go take a look at Netflix. Now, Netflix was down $6 earlier. Yeah, it's still down $5.50. But what Netflix did do is this. This is a high volume rejection of lower price. And Netflix, we're trading $4.13. We're going to hear a lot about Netflix tonight because, let's see, the Emmy nominations, they just blew away HBO. Normally, they're both battling each other, but let's see what they have to say. Netflix, home of The Crown, Stranger Things, set a new high for digital streaming, overtaking reigning champion HBO in the Emmy Award nominations for the first time. Netflix secured 112 nominations. That's amazing. More than any other network, while HBO received 108. According to the Academy of Television Arts and Sciences. The candidates for the 70th Emmy Awards were announced in LA today. It was also the first time Apple was nominated for the collaboration of Carpool Karaoke. Netflix accolades followed a rapid ascent in the television world. Let's see if they say where the ones that were putting up. Okay, so other streaming services, Emmy recognition, Amazon's right there, Hulu's right there. The Handmaid's Tale contributed to 27 nominations for Hulu. The Marvelous Mrs. Melsa helped Amazon collect 22. Netflix, let's see. The most nominated show was HBO's Game of Thrones with 22, followed by NBC's Saturday Night Live and HBO's Westworld. Yeah, Westworld's a weird one, man. I've watched it. I don't know if it's kind of weird, actually. They repeat the same thing all over and over again. Not the same show. It's just kind of how it works. Stay right there, folks. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So you get the World Series of Poker going on. They're going into the final table. If you remember about a month and a half ago, the Supreme Court came across saying yes, states can basically get into gambling, meaning single game gambling. And what you did have there is that you had New Jersey, Delaware. They were the first ones. They were set up to go. So watch this number, though. This is pretty cool. What this article is about is that it's saying that sports bettors are better in Las Vegas. It'll make sense because you have so many professional gamblers in Las Vegas. But here's how the numbers go, and this is how they basically qualify this. New Jersey, which took its first legal sports wager at Mammoth Park June 14th, released the data a few minutes ago of the first 2 weeks in operation. The state's books kept 7.8% of every dollar, earning $1.2 million on $15.3 million in total wages on completed events. Delaware, which went live on June 5th, reported a $7 million in wages in the first 19 days, and so far they are keeping, wow, that's intense. They're keeping 14.3% of that. They really don't know what they're doing in Delaware. It'll be less as bets get paid out. Or maybe that's not. Let's see. It'll be less as bets get paid out, unlike New Jersey. Delaware reports bets on future events as cash carried on the books. Yeah, well, that one might not be right. The average in Nevada, folks, is 5.1%. 5 cents out of every dollar. 5.1 cents out of every dollar. That's waged on. I'm just talking about sports gambling now. But bottom line is, it's only billions of dollars. So you can, the correlation, just to look at that correlation, it's 7.8 in New Jersey, 5.1 in Nevada. What's intriguing there, I guess it wouldn't matter if the Nevada bettors go up to. Yeah, it's not par mutual betting, because if it's par mutual betting, that's where you'd want to go, because then you're betting against the whole crowd, the crowd that's in the pool. You know, right now, I suspect the way it's done, though, you're actually betting right against the book. You are betting against the book. That's the bottom line. So let's go over and take a look at a couple of these car companies. If we go to GM first, GM out here trading at a price point of $39.27. And we pull this back a bit. It's in a big consolidation. You know, as long as this stays above $38.37, that would be saying that, okay, it's not. It basically can get higher. That's how that shakes out. And Ford, we take a look at Ford. Ford's trading 11.05. Yeah, Ford's certainly not no GM, chart-wise, that is for sure. So this is down from $18. So you're at 11 from 18. You continue to basically, this says a high volume low too, laying out here at 10.14. This looks like it still wants to go into lower price. You know, when you take a look at these markets today, you know, bottom line is that your broadcasters, whether on Bloomberg or CNBC, they're saying, okay, the rhetoric inside the Taft business is slowing down or slowed down. That's why the markets are up. That's not it, folks. Bottom line is it's always about buying and selling. What the markets do, which is pretty intense, is that they pay attention to things until they don't pay attention to them, and vice versa. You know, we'll see where this goes. When I'm looking at this market, what it seems to be is this. So watch. The NDX stocks, Taft's not going to affect those. Well, the ones that are high flyers. The reason being is that, you know, what are you putting a tax on? The bottom line is that we take a look at Amazon, if anything, and I can see why Amazon even went topside again today, is that in Amazon's case, if in fact the next tariffs go into effect, which is $200 billion on consumer goods coming out of China, well, what's going to happen? Well, what's going to happen is that other stores, so picture, you get the tax that's on it, because a tariff is just a tax, and guess what? Consumers are going to pay the tax. The companies can only pay that amount of money for so long or they go out of business. So then it turns into one of these deals. Do I want to stay in business, or do I want to basically pass it along and hope that someone will buy something? I think everyone understands that as you go up on price, you're going to sell less, especially when you're talking about a retail outlet. Bottom line, Amazon, because their margins are so razor thin, and they're so used to dealing with razor thin margins, don't be surprised if Amazon actually gets in more businesses that actually have tariffs on them. Because there's going to be openings out here, and the real question is going to be, what are the openings that just got established because of the fact that you have a changing dynamic inside your retail as well as your wholesale supply chain, because that's what we're talking about. That's the bottom line. And then the next deal will be the aspect of, could you imagine that you had just opened a plant in China, you're an American company, you know, the Chinese, yes, are going to own 50% of it or whatever, that's, I believe, how that goes. But you're opening a plant to basically push things back into the U.S. because we're the biggest consumer in the world. And guess what? The bottom line is that the tariffs go on it, because what we're going to see is that plants are going to, and this is where China can get really hurt. Actually, we'll go bring up the Shanghai, because what you're going to have is that there's plenty of other places in Asia, Vietnam, the Philippines, that are set up that will not have tariffs that are as high. There's some tariffs on a lot of goods, period. But bottom line is that it's not segmented out in those countries. What ends up happening? Guess what? You get a factory opened up really fast there, you get some business happening. If we go and we take a look at the Shanghai market, what you're going to see in the last 6 months is some pretty heavy destruction. We went from 3,500 to 2837. We take this on a monthly basis. Oh, on the monthly, it's actually looking pretty good. This is going to be pretty cool to watch this thing out then. So 2638. Yeah, this is actually looking pretty good. Though this is going to be interesting watching this play out. So January of 2016, we had a low of 2638 in the Shanghai Composite. We got to 2691 this month. We got what? We got about 13 trading days left in the month. There's an average of 21 trading days in the month. So if this holds right here, this is going to get intriguing. If it holds right here, Shanghai's saying that, guess what? That thing's going to go back to 3587. You know what's going to be really intriguing here is looking at it and saying, you know, did the market really understand that tariffs are going to come on them in Shanghai, or is it just an aspect that they're going through a cycle, and that cycle, because their debt cycle is huge. There's no two ways about that. We'll find out. The Nikkei, we go take a look at the Nikkei out here. Nikkei's trading at 22,187. And what's surprising in the Nikkei, folks, is this, is that if we go over and we take a look at the yen has got so much weaker and the Nikkei can't get going. You know, the yen's trading at 112.53. You'd think that the Nikkei would go to the moon with something like that. Hasn't happened. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Aerobics Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator signal that subscribers now use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com and requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go take a look at Ma Bell. So check it out, folks. The war is on between the government and Ma Bell. Ma Bell basically took the Justice Department to the cleaners. And many would say that they never should have basically brought them in to an antitrust deal taking over Time Warner. Bottom line is that they lost the case. They lost it like pretty quickly too. But guess what? The Justice Department just came across and they're going to appeal the case. So the Justice Department's division filed an appeal notice a few minutes ago in Washington federal court. This is, let's see, so Ma Bell, let's see, you traded at 32.23. I think it's just down 20, 30 cents or something. Yeah, no, you're down 50 cents. This just popped up, down 50 cents. So let's see what they're saying. Let's see. So, oh, this is pretty intense too, because when they did it, that's right. This is wild because Ma Bell, once they won, they closed the deal already. Ma Bell closed the Time Warner transaction June 14, 2 days after the U.S. Judge's ruling. The Justice Department had agreed not to seek an emergency court order preventing the deal from closing after AT&T promised to operate Time Warner's Turner Broadcasting as a separate business unit until 2019. In the decision, Richard Leon, who is the judge, rejected the government's argument that acquiring Time Warner would give Ma Bell the power to raise prices that cable and satellite TV companies pay for Time Warner content such as CNN, which in turn will lead to higher bills for consumers. AT&T countered that the government's economic model was riddled with flaws and that the deal will enable AT&T and Time Warner to more effectively compete against companies such as Netflix. The ruling was a blow to Delaham's approach. That was Delaham is the in charge of the antitrust inside the Justice Department to review in vertical mergers. For years, companies won antitrust approval for these deals by agreeing to restrictions on how they conduct business. Delaham rejected those behavioral settlements last year because he said they required enforcers to act as regulators who must ensure companies comply with their promises. Instead, companies should have to sell assets to fix competitive problems stemming from mergers. That stance led to AT&T lawsuit in November after the Chief Executive Officer, Randall Stephenson, refused the government's demand to sell DirecTV or Turner Broadcasting. Well, the brawl is on. You know what's so intriguing, folks, is that it just, you know, you don't know inside the community, the business community at this particular point, who's going to go down, who's going to go up, who's going to pick the winners, who's going to pick the losers. Because the bottom line is that that's exactly what we have out there, whether it's industries. We have it in industries, we have it in, you know, and that's all about who's going to get the jobs, who isn't going to get the jobs, because, you know, you protect the steel industry, you protect the aluminum industry. It's not a zero-sum game. There's winners and losers out here in a big way. If we go over to Ma Bell right now is trading at $32. It has support out here. $30. $30 is the high of the low of 2008, and it looks like it's want to stay there. If we go into the U.S. Steel, we take a look at U.S. Steel. U.S. Steel, even after being protected, doesn't have any traction. You're trading $35.93, and this has been a mess since 2008. It never came back. 2008, the stock's at $196. You're at $35.94. And you get basically you have a high-end, a low-end consolidation. If we bring this a little bit closer, take a look at it. It's not the end of the world. Well, as long as you didn't buy it, you know, 2008. I mean 2010. We'll see where that shakes out. Let's go into that oil market. So, oil couldn't hold price. We have Exxon coming out with numbers on the 27th of July. Exxon couldn't hold price. It looks to me like what we have here is that you get monster consolidation. It's been out here for quite some time. What Exxon is doing is going right into its downdraft from February. And this is a vicious downdraft that you're coming into. When we take a look at this, we'll just put this closer so you can see it. What you're going to see is that we've been up at the same level for 6 weeks, 7 weeks. Each week, you're doing 56 million shares, 62 million, 70 million, 30, that was a holiday last week, 33. You're coming into the downdraft. When we talk about supply lines, you're coming into 143 million shares. That supply line is huge, folks. And what, on top of that, watch how this shakes out. Because on top of that, what you're actually doing is that we can go all the way back to 2007. And what you see here is that the size of the consolidation is not only huge, but the supply line is huge. The supply line is from May of 2007 all the way over to February of this year. That's a huge amount of supply line that people are just trying to get their money back. They all bought over that level. Exxon is 4.2 billion shares. Now, the people that were in that stock, even for that amount of period, at least they get a 4% dividend. If we go take a look at Chevron, let's take a look at Chevron CVX, because those are the two largest weighting structures inside the XLE. We bring Chevron back all the way. Chevron's a better looking stock. Chevron's actually right next to its highs. You know, 135 is the high. That's interesting, man. I wonder, you know, Exxon is just can't handle higher price for a long period of time. So Chevron has been taken over. And if we take a look at this, let's just see how this shakes out. So Chevron pays a 3.6% dividend. Revenue-wise, it's $169 billion a year. They bring, okay, so Chevron is contracting right across everything they do. Upstream selling, downstream selling, they're contracting by 12%. Big number, man. Let's go look at ExxonMobil. So that number there was 169 billion. We go look at Exxon. Okay, so Exxon's almost twice as big, just under it. Exxon's 300 billion. Contracting at the exact same value, though, 13%. They got problems. So downstream's going down 13%, upstream's going down 13%. The chemical business is going down 9%. These are like per year numbers. Those are big numbers, man. Big numbers. Let's go to ConocoPhillips COP. See what we got with COP. So ConocoPhillips, that's trading $71.45. That's hanging at highs. That hit an all-time high yesterday. No, a yearly high yesterday. A yearly high. Their all-time high is 87 bucks. And Conoco does 39 billion. Oh, it's a lot smaller. They all have negative numbers too. Man, stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So tomorrow morning, 6:45, folks, get ready for some action. At 6:45, JP Morgan is going to kick it off inside the banking sector. JP Morgan closed at 119.33, 106.85 today. The high for the year is 119. The low is 88. And JP Morgan, bottom line is that, it already tested its swing low, February 9th swing low. You got a sign of strength out of here on Monday, Tuesday rather. And, bottom line, the way this is set up right now, it looks like JP can get up to about 109. And right now you're at 106.85. We'll see whether it gets any follow-through. What's going to be intriguing out here tomorrow is that you have the bank numbers coming out. You also have Friday in the summer, though. For Friday in the summer, you're going to get a contraction of volume. We'll see if, in fact, the banking numbers can get that S&P up and over your last swing high, because this swing high that we're talking about, where we're at right now in the SPY, is an important swing high. The reason why is this, folks. Last 6 months, so the SPY topped out on the 26th of January. That number's 286. It has been trying to make it through the 279 to 280. The first time it tried to make it through was on the 27th of February. It failed. Next time on the 13th of March, it failed. Then it took 3 months. When it failed the second time, it went from a price point of $280 down to $254 in 2.5 weeks. It took 2.5 months to get back up to this level. The next time it came back up on the 12th of June, failed again. Not a large pullback then. You only went to 280 mark down to 268, and we're right at this level once again. So what I expect you're going to see out here tomorrow morning, you're going to get the level tested, and we'll see whether it can basically blow it away. And the number to keep your eye on is going to be 280.41. That's the number. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow morning, 8 o'clock. Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.